Type 9. Type 9. Type 9.
Yo, what's up, guys? Good morning. It is a Fundamental Wednesday. Welcome back to the Everyday Growth Advisors live stream, where we learn, compound, and grow. You guys know it. What a week. What a week. I mean, come on. The last time we were on the stream, I told you guys to buy some hedges. And then the market did a RKO. And then we did kind of a testy of some weak hands shaken out. It was kind of like I want to say a corrective wave, right? But we saw that coming. We've been talking about this for a minute now, right? We've been talking about tech overvalued for like a minute. I've been saying this for the past 3 live streams. I've been saying, guys, remember the Dow Jones needs to catch up. Guys, remember the Dow Jones needs to catch up. Guys, remember NASDAQ is up here too far. Guys, remember Dow Jones needs to catch up. I've been saying that like a broken tape recorder for at least the past 3 live streams. And if you turned up and you tuned in, guess what? It paid off. It pays off. It pays off to attend the live stream, guys, because you let me do the hard work for you. And we all know in economics that if we assign work to one guy to do it, it's much better than 15 hits trying to think of something, right? I think that the less people in the less chefs in the kitchen, the better the meal, right? I think one chef making a meal. Okay, you know what? Maybe that's a bit untrue, but still, I think that if I were to be in a chef alone, like the chef alone in the kitchen and cooking, and there's much more space for me to work, I think I would do much better. Oh boy, now I just want to eat. I've made myself hungry. Well, thanks, guys. This is all your fault. Okay, welcome into the stream, guys. Fundamental Wednesday, we have a lovely packed stream. I hope you guys are having a great week. Welcome in, welcome in. make sure you smash the like button. That's all I asked for. Nico already beat me to that. Smash the like button. Feel free to donate if you want. There's super stickers and super chat if you want to do that. If you want to buy me a coffee, you feel like I've made you some money. Sure, why not? I'm open to it. I'll take anything I get at this point. COVID's making me broke. I'm kidding, guys. Not obligated to do so. Many attend this stream, and it's always going to be free. So I never will charge. Let's go through our regular programming. You guys know the drill by now. All the alumni and all the regulars of the EGA live stream. Let's get to it. News first, pre-market tickers, SPY technical breakdown, and then we're going to get right into Fundamental Wednesday with Microsoft fundamentals today. I hope that I can be done by 9:10. Oh, yeah. Well, it's 9:10 for me. So in about, let's say, 40 minutes from now. And then I can break down tickers. So if you want me to break down your ticker, make sure you have them, in the chat, and use the approved ticker format, like how everybody's posting. Just follow the same way, and I'll eventually get to it. We've been actually doing pretty good with tickers recently. I've been trying to get through all of them, so we'll see if we can get through majority of them today. And let's just make sure that I have this open here. Okay, cool. All right, so let's get to it here. Google and Geo to build cheap phones in 4.5 billion India alliance. This is Mukesh Ambani, who is the most richest man in, I believe, India and also maybe Asia. I'm not sure. He might be, yeah. It's his company, and Google's kind of partnering with him now. A lot of things going into India, because remember that's a untapped territory. I don't mean to go off on a tangent here, but there's a lot of potential there in India that hasn't been seen yet. Okay, and since it's a really emerging market, it is one place that big companies are going to naturally gravitate towards, because as the middle class there gets strengthened, it's going to be just another gold rush, just like China. Okay, so just take note of that. Have these things in the back of your head. It's always good to have these things in the back of your head. Let's see here. AstraZeneca rises on report positive vaccine results coming. Okay. We've heard the positive vaccine scenario at least 15 times so far. Stocks rally on vaccine hopes while dollar slides. That's what Bloomberg's saying. It could be on anything else too. I saw Goldman Sachs reported pretty good earnings. They blew everything out of the water. So that's also going to contribute to SPY going up a little bit, but more on that a little later. I'll get into the technical update in a second. China signals clamp down on easy money amid asset bubble fears. For people that don't know, China's stock market is on steroids right now, and the central government is trying to do, clamp down on people lending to each other, shadow banking, stuff like that, to make sure that the equity prices are not in a bubble phase, which already kind of has happened. So they're kind of acting now on it. Apple wins fight over 14.9 billion tax bill in blow to EU. That's actually pretty big for Apple, in my opinion. Wouldn't be surprised to see Apple up pre-market just on that news. That's a pretty big deal. 14 billion, 15 billion, hell yeah. Douchebang CFO has one more item. Okay. Tokyo list virus alert to highest level, urges caution in bars. Well, if I know something, my Japanese roommate used to love drinking, so good luck with that. But I do love Tokyo, man. Hong Kong ceases to be safe haven in gathering U.S.-China storm. There was something going on, once again, geopolitical tensions, lots of things going on there. Okay, that's kind of world news. Very mixed here. I think it's more bullish, bullish news, right? Vaccine hopes, positive, the word's positive, and then some positivity coming out of India, and then China's also signaling clamp down. Look, overall very bullish, okay? So we have to start to be careful here. U.S. stock futures rise after promising vaccine study. Well, okay, I'm not saying we should buy hedges right now. What I'm saying is be careful. That's all, right? Be cautious. Okay. Goldman posts flat second quarter profit. I think they beat expectations though, so might be, there you go. Quarterly profit held steady from a year ago. That's actually better than what we were expecting. Yeah, far better than expecting. And reflects a flood of corporate fundraising in target trading markets, offset slightly by high reserve for expected loans, which is nominal. All banks have been doing that, holding higher reserves, especially if they want to pass the Fed stress test, right? So, yeah, banks set aside 1.6 billion for loan losses, sharply higher than the first quarter, which can go through. Okay, cool. All right, got it. Shares are about 4.5% up in pre-market. That's a good sign. United Health Group's second quarter profit rose. This is another Dow Jones leader, right? Think about it. United Health is a Dow Jones leader. Okay, one of the biggest weights on Dow Jones. Why am I surprised? Why am I surprised? The Dow Jones had to rally, right? And so United's contributing to a big portion of that. So keep that in mind. Apple, okay, the same news here. Surging copper prices. All right, U.S. economy bolstered by consumer appetite for cars, homes. Okay. One thing that I was thinking about earlier today was a good indication of how this market's going to perform is when the stimulus checks stop coming in, and when unemployment payments stop. That's going to really be a big blow to the U.S. economy. Right now, there's a lot of stimulus from the government because they can actually afford to do that. But as time goes on, it's going to be getting harder and harder. So we'll see how that kind of turns out in the end. But welcome into the stream, guys. You know the drill. Make sure you like and subscribe. We do this every Monday, Wednesday, Friday. Smash the like button. I'm 100% sure that we can get to 100 likes today. We've done it before. We will do it again. I'm looking for at least 100 likes today so that we can get this YouTube algorithm to go crazy. Okay. Okay, let's look at the pre-market movers here. Dow Jones with some significant movers on General Electric here, 3%, up 3%. JP Morgan Chase up as a sympathy play on Goldman Sachs. Microsoft also up to 209 before earnings, which is coming up. Disney up a little bit. Caterpillar up again, just a little, not really that much pre-market shares. Boeing companies up 3%. I have leaps on those. Congratulations if you played that with me. Holding certain contracts pays off. We knew Boeing was going to make a move. It's been kind of in that descending wedge pattern and trying to break out for a long time. So let's see if it actually broke out today. I'll get to that. I'm sure one of you guys have Boeing as your ticker. Tesla up about 1%. That's not bad. 1543. There were some crazy Tesla calls bought for this week expiry, so I'm actually curious to see how this one performs. Today would be the D-Day, the day that you find out what happens. Okay, Micron, Okay, cool. Let's see. Trade news. Import price index, export price index, both positive here. New York Empire State Manufacturing Index also positive, and then the rest are okay. Overall, pretty positive news today. We have United Health that reported earnings. What is this? ASML. Goldman Sachs also reported earnings better than usual. U.S. Bank Corp. That's another bank. PNC Financial barely missed. Well, these are revenues and EPS, so yeah, that's a pretty bad EPS miss. eBay is going to report. Omnicorp Bank of New York reporting as well. That's positive. Overall, looks like financials didn't get hit too bad, and I think that's a good sign. As I say, financials is usually the sign to show you how the rest of the earnings season goes. So if banks do well, usually the economy ends up doing a little better than usual. Okay, not the economy, but the market. Okay, so just keep that in mind. It doesn't always have to be like that, but it can be. It can be like that. Okay, pre-market movers done. Let's have a look at the SPY technical update here. SPX. We've had interesting movements here. Let me get my little thingamajig. Okay, so we've kind of been in a channel here. I just drew this earlier, and you know, kind of bouncing between this kind of channel here, and I think you know, we had a couple of corrective and impulsive waves. And the only thing that I don't like about, I think we're clear to break above this, but the only thing that I don't like about the situation is this gap over here that just opened up today. And I think that at some point today, SPY is going to come down to close this gap. I don't know if it'll happen like today, but I feel like I would be much more, I would be much more calmer if SPY came down to close this gap right now. I would rather it come down, close the gap, and then move up again. Because gaps can be tricky situations where the index is forced to come down to close it. It's kind of like a psychological thing. There is another gap here, but this one got closed. You can see that. I would feel better if SPY came down and closed the gap, in my opinion. And that will also give me an opportunity to have another entry for any tickers that I missed, like Microsoft and Apple. Okay, if there's a little bit of a rug pull, that gives us an entry there. But then if SPY doesn't and continues to run, then it's going to keep running, and it is consolidating above this level, which it's been trying to break. So this was the double top formation that we were talking about in the previous market. Okay, this was the double top. This is the when SPY was breaking out of this on Monday, I said buy hedges. Okay, sorry, not Monday. This was Tuesday. For those of you that were on option swing, I think it was Tuesday. I'm pretty sure it was Tuesday. It must have been Monday or Tuesday. Okay. I said buy hedges here. Why? Double top, right? And then now we're kind of breaking out of it. But I don't like the break with the gap here. The gap up is a bullish sign, but the problem is it has to come down to close it at some point. Okay. So I would much prefer it if SPY came down and closed the gap right away. And I don't see a very big volume buying right out the gate. So we have to see how this market opens today. Okay, I wouldn't be surprised if we go green to red and then back to green. I wouldn't be surprised. And I would actually prefer that. Okay, NASDAQ is still having a tough time here with tech unable to catch a rally. But it's all, in my opinion, NASDAQ still has a long way to go for a correction, right? It's kind of neat. It's been bouncing. Okay, it did come down to 23.6 Fib retracement, but realistically speaking, if this continues, then NASDAQ is going to go up to this level up here again, which is going to be the 11,000 level. Okay. Once again, I think that NASDAQ is going to consolidate here for a while, or if there is some bullish news, then it's going to rip. So the overall consensus here is that SPY and NASDAQ, and then the Dow Jones at the same time, you can see the Dow Jones also gapping up, another bullish gap up, right? But the Dow Jones has a big gap fill above it. So the Dow can keep running and then eventually come down and close this gap. That's what I'm seeing. Okay. So Dow stocks, I think, will continue to run today. Look at your Boeing, United Health, Caterpillar, anything industrial. Look at the market rotation within Dow Jones. See what are the biggest weights. Try to play to your strengths there. Avoid tech right now because tech is kind of overheated and licking its wounds. You can see it's in a consolidation phase, and it hasn't picked a side. Right, it's kind of just like going right now. Obviously, consolidation above the moving averages is nice, but we are yet to determine what's going on here. Okay, so be careful. That's all I'm going to say. I personally don't like trading the NASDAQ at these and this kind of a setup. Okay, it's like nothing's at the price that I want to buy it. I would like it to get cheaper. So for that, I would say SPY come down, let me buy some stuff, and then you go back up. Okay. Cool. I hope that was helpful. Make sure you guys smash the like button, guys. Let's get to 100 likes today. I'm sure that you can do it. 100 likes. We are at 52 already. I'm sure we can do it, man. Come on, man. All right. So let's get into Microsoft right now. The fundamental analysis of Microsoft. I'm going to cover that right now. We have quite a bit of stuff to go through. So I'm going to do kind of a express analysis. Because we've done this a couple of times now, and so you guys know how this goes, right? We look at key financial metrics, and I'm also gonna kind of do, let's see if we can use Finbox to do a DCF 10-year exit, but then also do it in a way that's gonna be not too overly assumptuous. So 10-year exit, you see their fair value is 271. I don't necessarily agree with that. We'll need to make some adjustments here. The growth rates seem okay. We'll see. I think the discount rate is what we might. Yeah, we'll need to change the discount rate. Absolutely. I think this is what will fix it. The tax rate seems fine. Yeah, we'll fix the discount rate. I think the discount rate is what is going to be needed to be fixed over here. So we'll get to this in a second. Okay, let's look at Microsoft real quick. Financials wise, past 5 years. Let's look at the 5 years. Past 5 years. 1, 2, 3, 4, 5. These are the only columns you're going to be looking at. Okay, these columns here. Why can't I highlight these? Oh man. Okay, never mind. Revenues have been increasing steadily, right? Except for 2015, 2016, there was some kind of slowdown revenue. And then it's been kind of gaining traction since then. Introduction of cloud services, Azure. If you guys missed Monday's live stream, I highly recommend you to go back to Monday's live stream. Monday's live stream was extremely important. We went through a full breakdown of what makes Microsoft's Azure tick. Okay. Make sure that you smash the like button if you're here. I'm sure that we can get to 100 likes here. 63 already. I'm sure we can do 100. So let's get it. Okay. COGS, cost of goods sold. How much does their revenues cost them to kind of churn? That's been growing at a pretty conservative rate, and revenues have been growing at a faster rate. Gross profits and for that matter, after COGS are going to be increasing. So that's a good sign. Revenues are growing faster than COGS. We call this COGS in accounting terms, COGS, cost of goods sold. It's just easier to say it than cost of goods sold. R&D expenses have been on the rise, which is good. I like that Microsoft is actually investing a lot more into its infrastructure and into whatever that it needs to. It's a tech company, it needs to constantly innovate. So I'm actually surprised that these numbers are not higher, which is okay. These are in billions, so it's still a good percentage of their revenues. I would say more than 10%. So that's good. Okay, operating expenses and then operating income. You have your pre-tax income, income tax. Okay, let's say net income. So net income has been growing steadily here. In fact, 2019 was the highest. 39 billion, that is pretty damn good. EBITDA at 54 billion and also increasing throughout the 5-year track record. EBITDA is a very easy way to look at the company's cash flows. So just kind of keep that at the back of your head. And we have, of course, EPS, which is the earnings per share, nicely compounding over time and double in 2019. So I think that this year, if anything, if Microsoft has been pushing into the right direction, it's going to cause a pretty big, significant change within the company's operational status quo. Like how the company is going to operate in terms of its business, okay? And let's actually just see how the management is going to handle that situation, because we don't know, okay? Now let's look at the financials summarized over here. We're looking for revenues increasing. Obviously, we know that is true. We're looking at how is debt doing. So for financial health, looking at this over here, the debt to equity ratio is about 0.65, which is less than 1, which means for every dollar that they borrow, on equity, they're able to pay back their debt easily. Okay, and interest coverage is at 21.28 times, which means that they can pay back 21 times of what they borrow for every dollar. And then current ratio and quick ratio, extremely nice over here with close to 3. Very strong current and quick ratio there. Remember that the current ratio is the current assets over current liabilities that have a less than 1 year life. Sorry, 1 year, you can say kind of life, but it has to be paid in a year. So liabilities and assets that have to be paid in a year or have a 1 year span. Quick ratio is the total assets over total liabilities. And so both figures above 1 is usually the signal that the company has enough assets to service debt or liability. Okay. Revenue is growing at a 11.35 rate, which is pretty decent. Operating income at 16% for a company with just a diversified portfolio. I think great. Net income at 24%, amazing. And diluted EPS at 25%. That's pretty good as well. Net margin, the profitability, now we look at it. Return on invested capital 26%. That is awesome. For every $10 that is invested, they get $2.68 back. That's great, more than the majority of companies out there. And return to equity, 44%. If you are a stockholder, this is a great deal, right? Imagine. You put down $10, you get $4.40 back over a 3-year annualized period. Okay, I think that's a good return on equity. Return on assets about 16%. That's also pretty good. Most importantly, the price to earnings ratio of Microsoft is not way too high, which means that this stock has, for a tech company, obviously it's on the higher side, but it's not overvalued like majority of companies like Square or Zoom, which have crazy valuations, or Tesla, right? Okay, that's kind of that. Also, we have to look at the cash flows. How are the operating cash flows here? So cash flows from operating activities, that's what we want to look at. How is the company's operation from cash flows from operations? Because the cash flows from the operations shows you how much cash it is churning from their business. And that is if it is increasing. So over the past 5 years, it has 4 years, actually 5 years. It has been increasing at a increasing rate. That is good. The trailing 12 months cash flow from operating activities is 58 billion, which is also great. We have cash flow from investing activities. So this is any acquisitions of land or property or capital expenses, capex. That will be the investing activities, and financing activities would be any debt that they're borrowing. Looking like a big chunk of financing activities. We'll need to look deeper into that probably in the future. See what's going on over there. Pretty straightforward. I think that for a company of its maturity and its size and its economic moat, Microsoft does have an economic moat. It competes with Amazon in the sector of cloud computing. But other than that, I think it's a pretty good stock to own long term. Wide sense of diversified products. Don't forget, Microsoft owns not only just Azure, they own LinkedIn, Xbox. They have a good kind of a big market in various platforms. They sell a lot of Surface products and whatnot, which make up a bunch of its revenues. But right now, Azure is the main focus. That is what people will be looking at in the earnings report to see how the CEO is pressing its advantage in hybrid cloud technology. Okay. And if you don't know what I'm talking about, watch the Monday live stream, because I went through these concepts and I went a deep dive into the differences between Azure and AWS. Okay, to kind of give you a bird's eye view. Cool. So from a financial perspective, this company is a A1 standard. I think it's a great company to own long term. And if you like that so far with what we've done, make sure you smash the like button. Smash, 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 smash. Let's get to 100. I'm sure we are at 70 right now. I'm sure we can do a 40 more. Let's get it. 40 more likes. I'm sure we can do it. The other thing that I wanted to look at was the 10Q, but I didn't really find anything interesting on here, so I might actually skip it altogether. What you see here has been already summarized on all the stuff that I just showed you. Now the 10Q, what you really want to read from here at your own time is notes by the CEO or by the CFO or by the financial controllers. That's what you really want to read here. This would be great to read, the overview, to kind of tell you what they're looking to do, what they're thinking about, right? Over here, Microsoft, commercial cloud revenue increased 39%. Office revenue is now 13% higher. Consumer revenue 15%. LinkedIn 21%. Cloud services revenue increased by 30%, driven by Azure growth of 59%. So as you can see, I don't think that this is going to slow down here. I think that more people are going to adopt Azure, especially because Microsoft has an advantage here. They use a hybrid cloud infrastructure that allows slow businesses that have not yet adapted to one click and join. Whereas AWS is very specific with what services you need and requires a lot of expertise because the service offering is so massive. Okay. I think the best way for me to explain the difference is if you were an old man and you were trying to digitize your business, you wouldn't quite go for AWS. You would go for Microsoft's Azure because it's just simpler for you to use. Okay. But AWS is kind of like a more sharper sword. It has a much sharper blade, more defined services offering. Okay, Microsoft is more like a glove. It fits into multiple situations. I think that's honestly like a summary way to explain it. Okay, you can read the rest of this and see what management has to say, and I highly recommend reading these because sometimes they mention things that are important here. Okay. So let us do the discount rate here. That's what we need to amend on this DCF valuation for a 10-year exit. You can use Finbox to do these, and it projects out for you the cash flows on a 10-year basis. You can also choose a different style to do it. I personally like to use the 10-year DCF model with the garden growth exit. But I'm going to change the discount rate because the discount rate doesn't take into account higher cost due to COVID-19. Okay, so what we're actually going to do is make the high side about 10.5%, make the low side about 9.5%, and then make the mid side that, and then this will be 8.5%. And then hold on, 10.5. Yeah, that sounds about right. Wait, did I make a mistake here? I think I did make a mistake here. No. Wait, why is it being funny today? Huh. Let's do... Just got it the other day. I'm pretty sure that these were the numbers that I was using. It was 10, 9, and 8, I'm pretty sure. Okay, let's see. I think I needed to change something else as well. Okay, the perpetuity. Oh yes, this is what I was supposed to change. The growth rate. So the growth rate is no longer going to be so low. It's going to be a little higher. The risk-free rate plus GDP. GDP going to be negative, but we're going to take an annualized over 10 years. So the U.S. economy tends to have a bigger GDP on the tail end of this business cycle. So we're actually going to go ahead and amend this a little bit. Let's try 5, 3, and 6, and 5, and 3. Was it 3 or 4? I think it was 4. I think think it was 4. Yeah, so it's 654. That gives us, okay, that's good. I think that reflects more of the company's discount rate there. The tax rate we're not going to change. The depreciation and amortization will stay the same. Working capital will stay the same. We don't want to mess with these too much. We'll keep it the same percentage of revenue and assume that the company will have 11% capex expense and then kind of dwindle down after 2005, 6, 7. Okay, that's fine. And revenue and EBITDA growing at about, how much was revenues growing at? Let's have a look again. Sorry guys, sometimes these things take a lot of trial and error, so I'm doing it with you live, so it's pretty much a learning process for me as well. Okay, so we go back to Microsoft here and we look at how much the revenues were growing. I believe it was in the 11% range. There we go. So we go back here. So the average is going to be 11%. Yeah, that looks about right, I think. Let's just make this number a bit higher, I guess. We'll make it 10%. Okay. Cool. Looks about right. I think I like it. I'm going to make this 10.5. And I'm going to make this 9.5. Let's tweak it. And this one 8.5. Nah. Screw it. 8, 9, 10. Easy. Okay. All right. This is what we're going to go with here. Remember, this is our assumption. Okay. It's our assumption that a DCF exit model, okay, is based on assumptions. Now, the discount rate, what is this discount rate that we're talking about over here? This is the weighted average cost of capital that Microsoft will have over 10 years, okay? So we're saying, because of COVID-19, we say the company is expected to have higher expenses over the next 5 years at least, okay? And maybe there's a trickle down effect on the expenses. Now, it's not necessary, but we want to value the business based on its cash flows right now, right? And so if the business is having some kind of a higher expense in the next 1 to 2 years, we need to account for those by increasing the discount rate so that we have a flat discount rate across the board annualized over 10 years. So earlier it was like, I think 7, 8, 9, and I just increased it by 1% to 8, 9, 10, right? Which makes it a bit more reflective, 1% above what it is currently. And then at the same time, we change the perpetuity growth rate because what this rate is over here, this is the terminal rate. It's called a terminal rate, a terminal growth rate, okay? And the terminal growth rate is essentially, if the company wasn't growing anymore, what would the growth rate be, right? And that rate happens to be the risk-free rate, which is, you can say, since we're doing a 10-year DCF model, we'll use the 10-year bond, right? And then we'll add it to the US GDP per year. And so over 10 years, what is the average US GDP? That's going to be about 5%. And then you add the risk-free rate of a bond, the 10-year bond, treasury bond, right? Because that's the risk-free treasury bond rate. You would get about a midpoint of 4, 5, and 6. Okay, so these numbers are already pretty much like in part of majority of my DCF models. So the assumptions that you make change the price of your model. Okay, so I'm not saying that this is, oh, Microsoft is for sure going to hit this price. No, it doesn't mean that. What it does mean is that this is the value of Microsoft valued right now. Okay, based on what we're seeing right now, Microsoft is valued at $256.46, okay, in US dollars. It doesn't necessarily mean that it has to say, oh, Microsoft is going to go to $256 and then come down. No, it doesn't mean that, okay? So just keep that in mind, okay? However, I say 230, 240 is easily its real valuation. So a 250 would be on a slightly a higher extended side, which I think is very possible by next year. Okay. So that's your DCF valuation. Remember what I said, it's not a for sure thing, so be careful. And here we can see SPY selling off a little bit. Let's see if we can hold above this line here. This would be important here. Pre-market holding above this would be strong. Okay, 14 more likes to go. I hope you guys enjoyed the valuation and the fundamental analysis today. Great having you guys here. Welcome into the stream if this is your first time. Make sure you click like and subscribe. And yeah, all right, let's get to these tickers right now. I have about 20 minutes. I'm going to get through them as much as possible. So remember, Microsoft fair value estimate is about 250. Let's just say 250 even. Let's call it a day there. I think a $250 target price is more than likely a good target for Microsoft, which means that's going to be a 23% upside from today's pricing. Okay, so there you have it from the horse's mouth. All right, let's get to it now. Okay, ooh, 5 more likes, guys. I'm sure you can do it. Come on. All right. Good morning. How are y'all doing? Tesla 1530 calls for this week. Welcome back, JR. Nice to have you here. Haven't seen you in a while. I think you've been busy, huh? 1530. Yeah, I think so. I think Tesla is gonna go up there easily. I have some Tesla calls for this week. But I'm not like necessarily very bullish about it. It's kind of like a lotto. I took a lotto play on Tesla for after a long time because I feel like it can make another run here. But let's see. I think I would hold it, in my opinion, and then sell it by today. Home Depot 270 call 731. Home Depot. Oops. 731. 270 calls. Well, it's looking nice for a breakout here. I like this one. I think one of our mods, Will or Jim, were looking at this as well. So I think they must have posted the analysis here on... I think it's on our Discord. I'm pretty sure I saw someone put the analysis on there. And they did a technical analysis on it as well, which was really great. Go look for it if you're part of option swing. But I think that, yeah, Home Depot might break out here. It's looking good with the volume. If we can get a nice break above 259. Wait, let's see. Did we already break? Oh, yeah, we broke. We did break. There we go. Home Depot just ripping now. I think you should hold your position and ride it. And then exit on the next impulsive wave. That's what I think. Chris. You still have time on those contracts too, so you should be good. Microsoft 260 calls 821. Hold it. Bank of America 25 calls 731. Hold it. And Bank of America... Wait, is this a spread or... Well... I would get rid of this portion since banks are reporting positively. You can let your calls ride, to be honest. Hey Tushal, hello from DR, Dominican Republic, I'm guessing. Welcome, man. Hi, Saul. Thank you for attending my stream. I appreciate you being here. And thank you guys so much for the 103 likes. I appreciate you guys so much. Much love to all of you, man. I really, it's crazy to think like how this stream started with just 5 people and 10 people attending, and now we have almost 150 to 200 people attending regularly every single Monday, Wednesday, Friday. I really want to, take a moment to thank all of you guys for being here and, supporting my stream. Remember, this is not like other streams that you're going to be a part of. I don't believe in like talking about a bunch of things and rambling on about things that don't make sense or, giving you the fish. I like to teach. And so this stream is always going to be educational. It's not going to be for people who are just looking out for handouts. Okay, this is where you learn. You learn, compound, and grow over here. And I'm not trying to build like a very big following, like, oh, I want to get like 1 million subscribers or something. No, I'm not interested in that. What I do want to build is a really nice community that can be, learning together and teaching me while I teach them. So every time I start this live stream, I'm learning from you guys, and I appreciate you guys giving me the opportunity to be, a person to guide you. That's all. So thank you very much for attending the streams, and I appreciate each and every one of you. AMD 58 call 724 AMT. Oh, that's right. I forgot to tell you guys something important. So actually, two things important. The first thing is, I started my master's program this past week. So for people who don't know, I'm actually now officially back in school, and I'm doing my master's in finance at St. Mary's College in Moraga. Now, I'm not actually in Moraga right now. I'm not in California, but I'm doing it from abroad. And I will be probably going back to the Bay Area as soon as, I can. Right now, the situation doesn't permit me to, but I'm sure that in the future, once the travel bans are lifted and the embassy opens back up, then I will be able to do so. So when that time comes, I would love to have a Bay Area meetup for anybody here who is from the Bay Area. And remember, I will definitely hold one of those in the future. So make sure that you come through if you're from the Bay Area, okay? And the second thing is, if you have been wondering when is the next Everyday Growth Advisors mentorship program, which has been wildly successful, and if you don't know how successful it is, we have a lot of testimonials about it here. You can read them if you're from the Option Swing platform. There's pages and pages of them from past students who have taken the course, right? Yeah, guys, it just goes on and on here. So, if you want to read these and you're wondering when the course is going to start, the signups for the next wave is going to be this coming Saturday, okay? So here's the details so that you guys are kept in the loop. I don't want to leave you live stream folks out of sync here. So this is kind of like the infographic that I posted. If you have been losing money on trades and you can't figure out why, I highly recommend you to take this course, okay? I think that there is a real benefit for you to take the course. What does the course include? It includes an introduction to financial markets, the way that I see it, option strategies taught in a virtual classroom setting, and we'll be using guidance using paper trading on TOS. I'll show you how to use some tactics that you can use, how to set up stop losses, how to do all those kinds of things. It's a very basic integrated approach to the stock market, okay? And then how to leverage and integrate the Option Swings platform into your trading ideas and your trade plans, as well as all of the meetings will be recorded and delivered to your email every single day, so you can recap everything, okay? So make sure that you sign up this Saturday. The sign up is going to be at optionswing.com, and there are going to be limited spots available. There will be, I believe, only 50 spots, so make sure that you get there at 12 p.m. Eastern time, I want to say. And that's going to be the time that the registration opens. Okay, so 12 p.m. ET and 9 a.m. PST. We want to give a chance to the folks on the East Coast, on the West Coast to get on it as well. If you're a Option Swing member, you'll get a $80 off coupon code that you can apply towards your tuition. And if you're a non-Option Swing member, message me, see what I can do for you. If you're truly interested and passionate about it, message me on Instagram, message me on Discord, message me on Instagram. You wouldn't have the Discord, but message me on Instagram and let me see what I can work out for you, okay? Because I would hate for money to be the reason why you can't grow your knowledge, okay? And I want to do everything that I can to help you, okay? The 5-day course will go on from the Monday to Friday of the next week, and classes will be at 9 p.m. Eastern time, which is 6 p.m. Pacific time, okay? If you want to see the curriculum, it's up on my Instagram page, which is Everyday Growth Advisor. All right. Cool. Let's see. I want to just see if there are non-ticker questions here, and then I'm going to try and get through the tickers as much as I can, okay? I promise I know where I stopped. AMD was where I stopped. I'll come back to that in a second here. Good morning. Good morning. Good morning. When you say hedges, what are you specifically talking about buying? VIX? JR, it really depends from situation to situation. It depends on what makes up your portfolio, okay? I have posted an infographic about this on Instagram. If you go take a look at it, I think you'll get a better idea. Really, go look at the Instagram graphic that I posted. It's very helpful to understand how or when you should hedge. Okay, I don't want to take too much time to explain it because personally, it really depends situation to situation. Say for example, your portfolio is very tech heavy. I would take QQQ puts, right? Just as an example. If you're sitting deep in SPX calls, or you're sitting deep in SPY stocks, then you can go UVXY, or you can do VXX, or yeah, like how Corey said, right? UVXY, VXX, SDS, TLT. There are many of them, and Corey, it's not really about what's cheap. It's about what gives you a good risk to reward ratio, because that's what investors are looking for. Okay, that's my thoughts on it. But thank you for putting those there. I appreciate you. Thoughts on Caterpillar? Okay, I'll do that in a second. Good morning. Good morning. Let's see. Okay, here. Good morning. I guess SPY filling the gap. Maybe. Let's see if it will. You took a Tesla Lotto, you? Yeah, I did. We appreciate you. Awesome, man. Thank you, man. They kill earnings, but we might have missed it. Maybe. Let's see. Hold up. Thank you for taking the time to stream. Thank you for being here, Mario. I appreciate you so much. I just found you, and I am hopeful for growth. You're different than other communities and streams. I appreciate you saying that, Nick. And that's what I'm trying to do. Build a community here that's strong, and people who really want to kind of learn from each other. Not the usual live streams where they're all about getting likes and whatnot. But the likes over here definitely do help me though, because they help other people find the stream. So that's the reason why I asked you guys to smash the like button, because it's going to help other people to find the stream, and YouTube will start recommending the video to other people. So I really hope that you guys will continue to smash the like button. SoCal meetup, yeah, maybe one day. Absolutely. Really enjoy your knowledge and professional analysis. Thank you, man. Appreciate that, Dan. I'm looking forward to having you more often here. Congratulations on starting your masters. What's the focus on? I'm doing my masters in finance. I'm trying to finish my bachelor's in finance and hopefully following your steps. I'm glad for you. Great job. Never stop learning. Absolutely, Jonathan. I feel like I'm going back to school and it's so crazy. Like, it's really, really crazy. Learning accounting and economics again. And I'm going to be doing my CFA at the same time. So it's going to be... Hello, Tosh. My name's Tushal, but that's fine too. Call me whatever you want. Could you do Chewy? Blah, blah, blah. Okay, I'm sorry, but there are so many people above you that have postal tickers. I need to get to them first and be fair here. I attended the course, and I must say, beside all the useful information, you learn how to control yourself. Absolutely, that's the main thing that we teach. It's the psychology behind trading. Yes, the 5-day course is totally worth it. Thank you, M, for saying that. Appreciate you. Also, can you give me your Instagram, please? I'm really interested in joining the course. Absolutely, Mubin. Here you go. It's Everyday Growth Advisor. There you go. That's my Instagram. Go ahead, follow the page, and then you will be able to see all the information regarding the course. Make sure that you sign up on time, because I'm pretty sure the spots are going to be taken pretty quickly, okay? All right, dope. Let's see if I can get as many tickers as possible. AMD is where we stopped at. AMD 58 calls 728. Yes, I do like this one. If we can break above 55 with good volume and momentum, we'll see a 58, definitely. I think you should hold on to it. There's a chance that it may happen, especially if SPY's going to bounce here. Oh, we did get a bounce here. That's nice. So we'll see. Remember, guys, careful of the rug pull, okay? I swear to God, market makers will try to pull this down just to close the gap at some point, okay? Just be cautious and do not overcommit yourself to too many bullish positions. That's all I'm going to say for this live stream. Okay, that's going to be the main thing about this live stream. Don't overcommit yourself to too many positions open on the bull side, all right? Because the rug pull can come at any time. All right, CVX 95 call 821.20. What is CVX? Chevron, right? This is an oil play 89.95 call 821. 95. Yeah, seems pretty good, but it needs to break above this level first, man. 90, 80. If Chevron gets rejected here, I say get rid of your calls. Delta Airlines 50 and Boeing leaps 400. Yeah, sure. If you have the cajones, take it, bro. I mean, I can't see that going wrong. Well, Delta, maybe I wouldn't. I need to see where the Fibonacci retracement would be for Delta, to be honest. Let's see. I'll do it right now for you. That's one of my alumni student Byron from the very early Everyday Growth Advisors wave, the mentorship course. So let's see here. Okay, so if we're looking at this from this perspective, let's look at the daily. We're going to use a fib retracement here and see from the top to the bottom. A 50% retracement would be at 40. So yeah, 50 might be a bit much, bro, in my opinion. But it's not impossible. It's just for 2022, I mean, I guess, but I say you go like 40, man. 40 would be a sweet strike, to be honest. With Boeing, I think, yeah, that's fine. You can buy Boeing, to be honest. Uber, 35 calls, 731. Let's see. This is another one that I like, but it keeps bouncing around and it's always exhibiting bearish behavior, which is starting to get really annoying. I want to wait for Uber to clear this level here and then fill this gap up to 39. That's what I want to do with Uber. I don't like playing the odds here. No good risk to reward ratio here. The more reward on the downside than there is on the upside. The pressure is also on the downside. So I say close your position out, wait for a better day. Microsoft 235, 731, hold that one. Facebook 270, 724. That might be a bit too far. Same thing here. Triple M, yeah, you can hold Triple M. It's industrials. All right. Goldman Sachs 724, 220 calls. How far will it go? Well, I think this is where it has to come down again and then make a bounce and then go back up again. That's just the way that I look at it. Often irrationality works both ways. So the bulls will push your price up irrationally and then bears will push the price down irrationally. So be careful here. I wouldn't I wouldn't chase this, but I would take your profits whenever you can, to be honest, and then re-enter at a pullback if you are bullish. Amazon call expiry 724 will recover. Maybe. I mean, Amazon is a strong company, man. So yes, absolutely will recover. I say buy Amazon on the dips. That's what I say. Monday, McDonald funeral. Netflix 717, 560 calls. Yep, I saw a lot of Netflix flow, so I would hold this one, personally. But sell it by today, though. AMD went through this already. Went through Microsoft already. Boeing 185, yes, hold that one. I think you should sell it by Wednesday, though. No, sell it by Friday, this contract, and then roll it over to a further expiry. Don't hold this contract over the weekend. Your theta drain is going to be terrible. Just my friendly advice there. Hold that one. Microsoft is fine. Let's see here. There's a lot of these here. Okay. DraftKings 821 $40 call. DKNG. Let's have a look. Bearish. It's bearish. I would get rid of it. Broke below. It's been kind of in this very bearish trend. You'll have to wait for a break above this level here, 35 with good volume and a reversal here. So expect a impulsive corrective, and then up there, and then you can start taking calls on it. So I would get rid of this position. Moderna 75 call and 80 calls for 724. Damn, you're betting big on Moderna, boy or girl. Let's see. 75 and 80 call for 724. Well, it is up pre-market and it seems like you made bank. So I would take your profits off the table and smile. That's what I would do. Snap, I like the uptrend with Snap. Hold it. Personally, I would hold it. Baba, I like it. 240 calls. Yep, hold it. Microsoft already went through this. McDonald's, let's see. Booyah, McDonald's. Close it out, take your profits. If you're still bullish, wait out of the corrective wave and get in again. They are expiry. Be mindful of your expiry, Mubin. You gotta really close that contract out as soon as you can because your theta is gonna drain you. Take profits and then buy a different expiry. Buy a further expiry. Apple 390 calls. Yep. Very bullish on Apple right now, personally. Okay. Wow. Did I actually get through all tickers? No. Oh, well, I already did Moderna. Boeing. Yep. Whole Boeing. Microsoft did that already. Oh, wow. We got through all the tickers. Awesome, guys. Great. 115 viewers and 113 likes. Come on. I'm sure we can get 2 more likes and make it even, right? 115 viewers and 115 likes. That means everybody liked the stream. Huh? Smash the like button, guys. I need 2 of you guys to smash the like button. I'm sure you can. I'm sure that you can. Do it for me right before we get off here. Well, thank you for attending the stream today, guys. I appreciate each and every one of you. Make sure you join in back for Recap Friday, where we will go through whatever happened through the whole week with Microsoft and with the rest of the market. And then remember to come back on Friday to choose the next ticker for Monday. Remember, we have been choosing these tickers communally, okay, as a team. And by doing so, we have been finding great success. So come back on Friday to make sure that you're part of the voting to get your vote in to choose the ticker. Because last week, Microsoft won the votes. And that's the reason why we did Microsoft this week. And then on Friday, I'll take another vote. And that ticker will be the ticker for the next week. Okay, so we will go through that ticker for the next Monday, and it'll become new ticker Monday. And so that's how the stream is going to be flowing from now on. Okay, if you like the way the stream is flowing, make sure you throw a couple of fire emojis in the chat. I would like to see a couple of fire emojis if you like the way that the stream is going now. And with that, I want to say thank you guys for attending the live stream. Have a good day. See you on Friday. And peace out, guys. After taking the class, my portfolio went from 4K to 23K. Take the class. Thank you for saying that, Mario. That is big, man. I'm so glad that the class helped you out. I'm really glad. Alrighty, guys. Have a good day. Happy trading. Be safe out there. Don't be greedy. And we'll see you on Friday. Peace.